All right, GameStop earnings. Let's talk. So DRS count was 8.9 million shares from the most previous earnings report, which was reported yesterday after hours. We saw sales revenue growth on the top line go up prior to pre-pandemic levels for, I think it was Q4 2019, which was right before the pandemic hit. So we are now seeing growth in top line revenue for the first time since prior to the pandemic, which is a huge step. If you beat the pandemic numbers, okay, well, they were maybe hurt because of the conditions of the pandemic, right? Now we're past that. Now we see the top line revenues growing. EPS, not quite what maybe we were expecting. It was negative, but look, they're spending a lot. By the way, none of this is financial advice. It's just my personal thoughts and opinions. But where I saw them spending the most, and it really stood out to me, was inventory, dealing with supply chain issues. I'm okay with that. Looking at the long-term things, got to keep your customers happy. If you don't, shout out to Marantz Rants. He said this best. If you don't have the product, how can you sell it to the customers? How can you satisfy the customers if you don't have product? It just doesn't work, right? And then furthermore, the DRS count, people, only 8.9 million, this, that. In the past quarter alone, those 8.9 million, I think it was 3.7 more than the previous one. Yeah, because it was 5.2. So 3.7 billion more shares. If you average that out based across the average cost basis of the quarter, you're looking at almost 500 million, I think it was, worth of DRS, half a billion dollars worth of shares transferred to Computershare in one quarter. And we know top line revenue is growing. We know they're hiring aggressively. That's where a lot of their spending is coming in, because their administrative costs were much higher than the previous year. But that's because we know they're hiring like crazy. They're bringing on talent. That comes at a cost, right? And the last thing that I really I'm trying to keep this brief, just a general GameStop earnings report rundown, just pull it all together, right? What I see going on here personally, my own personal thoughts and opinions, Ryan Cohen is just saying, look, we know, me and all these guys I'm hiring, look at all the people they're bringing on. Why would they be compensated in shares and leave well-established companies where they're earning and doing well for themselves, these individuals? They're leaving to go work for GameStop. Imagine what Ryan Cohen is telling them. I think I know what he's telling them. I think he's saying, look at the shorts. Look at the short interest going on here. Look at the way our GameStop is being abused, right? Look at the way the stock, I am the majority owner, or I am 10% ownership of chairman of the board. Look at the way the stock's being abused. Here's our plan. This is what we're doing. We're going to keep innovating the business. That's all we're going to focus on, is keep driving revenue growth and just overall growth of the business. The Power Up Rewards members was up 37% year over year. That's crazy. That's a huge thing for brand loyalty. That shows GameStop's really building its name up again. I mean, it shows me that, at least. So I think Ryan Cohen is presenting all this to these executives, and they're saying, oh my gosh, and the stock is still being shorted so abusively, and you're offering us to be compensated in shares? All they have to do, guys, what I'm realizing is Ryan Cohen and executives, and this is why I think I need to just personally, at least, maybe you do too, it's up to you, but I personally need to really work on just being more zen. This is when, not if. It's going to happen. I truly believe that from the bottom of my heart. But when you look at it, I think Ryan Cohen and all the executives he's bringing on, they're all thinking the same thing. They all know that it's going to happen. They just don't know when. It's not if. It's only when. They just don't know when. So they're like, okay, all we have to do, we're in the driver's seat. We're the executives. We're running the company. We're compensated in shares. So our compensation correlates to our performance to an extent, of course, but that's the general idea of it, right? And then his whole buying Bed Bath & Beyond, overpaid executives, that's what he's referencing, because that's what was going on with GameStop prior when they were being shorted so aggressively. You think old management cared? They were still getting their checks. They weren't really owning that many shares. They just didn't care, and they just didn't have a plan. But now you see these guys being compensated in shares. They have a plan going forwards. So they're just saying, all right. And I think they read Superstonk, or you don't think Ryan Cohen shows Superstonk and says, look, we're not the only ones that know about this. This is being suppressed. But people know. People like me, people like you watching, we see what's happening here. And I think over time, that's why all these executives are coming. And he's saying to them, look, we know our turnaround plan. We know what we're trying to do. And we're going to be hush-hush about it. But people believe in us. It's evidence of Superstonk alone, and never mind beyond that, that they're saying, look, people believe in our company, and we believe in ourselves, So let's just keep innovating our business, keep innovating, keep bringing on talent, keep driving top line revenue growth. Eventually, top line revenue growth will become bottom line revenue growth as well. It's just right now they're focused on things like inventory, customer acquisition, customer satisfaction. So over time, they'll be able to get those margins back and have positive EPS. And then you could see something like NFT dividend, even a regular dividend would burn the shorts. It's just like, it's a game of patience. This is, at this point, this is by far an investment, not a trade. It's long been for me. Maybe some other people like thinking otherwise. And honestly, I was very excited for the earnings report. And then I just thought, as it's happening and the call ended, I'm like, did I really expect anything different on this call? Did I really? Like, deep down, did I? I don't know, maybe. But at the end of the day, I mean, it was a good report. We have some idea of where they're going. And again, it's still hush hush, but that's always how they've done it. And there's a reason they're doing it, obviously, because of the short interest. And yeah, I mean, their top line revenue looks good. They're moving in the right direction. They're hiring. It's only a matter of time. And I'm willing personally to take as long as it takes. So I'm just going to keep an eye on it. Overall, I think it was a good earnings report. The DRS count, DRS your shares. They might not be able to be sold or bought on regular brokerages one day. It could come to that. We'll see. But that's really it for the GameStop earnings recap. And my whole point with this video is just Ryan Cohen and friends see what's happening. When I say friends, I mean executives and people he's working with. They see what's happening